Hello, everybody. C. Ray Brower here with John Lone King from Summit Funding, and we're going to find out about some crazy down payment stuff coming up next. Hey, John, how's it going?
I'm amazing, C. Ray. How are you, my friend?
It's just another day in real estate paradise today. It's you know how it is when you're trying to get one closed and everything just isn't quite falling together. Well, that's been one of my mornings so far. But other than that, it's been fantastic.
Is it cash purchase?
No, this one's a loan, and
Then I guess you got the wrong lender working on it, C. Ray.
I truly made the mistake of not reaching out to the lender because the lender and the buyer's agent live together. And so I thought that, I'd have all the information straight from, but it's been a little bit of a struggle. So,
that is what happens when you assume, right?
Yeah. You just, you don't follow your normal steps. It seems to always have that little nip on the backside every now and again. And,
I was taught a long time ago.
Big shoulders.
I was taught a long time ago by a mentor that a great business is a boring business. That follow your process, do what you're supposed to do, and a tried and true process, even if it's not perfect, way better than trying to reinvent what you're doing or get more excited and have fun with it. We can have fun in lots of ways, but when it comes to sticking with the tried and true process that works, a great business is a boring business.
Yep, exactly. And excuse me for 1 second. I didn't close my door, and I hear that dog barking, and it may have not made it through to this mic, but if it gets worse, it will. So hang on 1 second.
No problem at all, C. Ray. Take your time. I'll just keep talking. I'll fill in the blank. We'll pretend that you're here, and nobody will ever know that you were gone. See, just like that.
The joys of a home office.
The joys of a home office. Absolutely.
So we had to reschedule for today instead of last week, and that was because you were in New York?
I was in D.C. and New York. So I went with my son's 8th grade graduating class, had the opportunity to go to D.C. and New York, and I went with him as well. And it was a great trip. Probably my highlight was on day 3 when my son said, "Wow, Dad, this is not as bad being with you as I thought it would be."
Thank you.
Right. And I know he meant it in the right ways. My wife my wife and my son are very much alike in that, for them, sightseeing is kind of like what we saw on, National Lampoon's Vacation when Chevy Chase went to the Grand Canyon, and they kind of just looked at the Grand Canyon and, okay, kids, let's go. Yeah. And my oldest daughter and I are more, I want to read and I want to, take it in. And so he kind of thought I'd be holding him back, but I did a good job of making the trip about him instead of about me. And so that was definitely a compliment. And I think he intended it as a compliment.
had to slow down for just a minute to make sure and let it sink into you that was a compliment.
That was a compliment for sure. It was a compliment. So we had a very, very good trip, and I appreciate your willingness to reschedule.
Right on. That's great. Things come up in our life. We've got to make those adjustments, and as we were talking about before we came on, you got to look like a duck and be so calm and everything on top and battle like crazy under the water.
It's kind of like what we learned 3 years ago when we all started going on Zoom calls, which is, hey, as long as I look like I'm dressed professionally, you have no idea what I have on down below. So
please, let's stop there.
I won't pan down on the camera, even though I am business up top and business on the bottom, but I won't need to prove that to you. Oh,
or be like the goose up at
yeah.
Lock Antenna. So on number 7 at Lock Antenna Lake, there was 3 ducks and a goose.
Okay.
That the goose adopted the 3 ducks, or the 3 ducks adopted the goose. I'm not sure which way it was, but they'd do great when they were out in the middle of the lake. They'd just swim around. But when the ducks got up close to land, where they could swim, but the goose was too tall, the goose would duck down in the water, squat down, and get down even with the ducks and waddle through the shallows.
Isn't there a saying that something about if it looks like a duck and it quacks like a duck, well, in this case, it might be a goose.
Might have been a goose.
That's okay. When we were in DC, we saw teleporting ducks. This was probably the highlight of the kids' day. I'm not kidding. We were walking up to the Jefferson Memorial, and you're right there, and you got the water right in front of you as you look over to the Washington Monument across the way. And all they're looking at is, wow, look at those baby ducks. They dive down in the water and then they pop up 10 seconds later somewhere else like they're teleporting. That was an 8th grader's highlight of walking to the Jefferson Memorial, was the teleporting ducks.
The teleporting ducks. I took pictures. I went out. Me and a buddy have been, high school buddy, have been hitting golf early mornings once a week. And today was the day we were supposed to go. And he had to go to Sacramento, so I went out by myself. Okay. And in between holes 8 and 9 at Elkhorn, there's 2 goats. 2 pygmy goats.
Okay.
got the little bandanas on and everything. I went, what's going on?
Did you take a picture, C-Ray?
I did. I did. You want to see it?
I would love to. I believe you.
When I was leaving, one of the greenskeepers was watering the practice green in front of the pro shop, and I stopped and said, "Hey, are we going ecologically green here at Elkhorn now?" And he says, "What?" And I said, "Well, we're using goats to mow now." He says, "I guess we'll have to change the name to Goat Horn, huh?" I said, "Well, you could."
I love it.
Lord. But you have an amazing program that can help people get into a house, because we all know right now that's kind of been a tough thing. But 1% down?
1% down. So I'm gonna give you the teaser. It's a 1% down payment with 0 mortgage insurance. So it is a really good program. But before I go there, I wanna take 3 or 4 or 18 minutes. Not 18 minutes, but I wanna give you some background on what's happening in the industry and how this program kind of is coming about, and who's offering it and why. Okay. Right. So I'll start by saying that there's 3 types of companies to go to when you're looking to get a mortgage. And that is a big bank that does everything. They do mortgages, they do checking and savings, they do credit cards and auto loans. But for the most part, they get their money for mortgages from the federal government, from Fannie Mae, Freddie Mac, FHA, and VA. And then your second option is to go with a mortgage bank that only does mortgages. So my company, Summit Funding, the company I work for, we're a mortgage bank. So we get our money from the same place, Fannie Mae, Freddie Mac, FHA, and VA, but we don't do anything else. We don't do checking, savings. We better be good at what we do, because we have nothing else to fall back on. Right. The third option is you go to a broker. So a broker is an independent mortgage company that actually doesn't have access to the money. They send their loans to a mortgage bank or to a depository bank, and they don't actually control the process. These larger companies are what's called wholesale companies, where they buy those loans from the broker. They take the loan in, and the wholesale lender underwrites the loan. So it's been for years a real clear distinction between the three pillars, between the three types of companies, and it's ebbed and flowed on, where's the best place to go? Well, gosh, in 2008, 2009, 2010, big banks were the only place to go, because brokers had been blamed for collapsing the economy and really driving the problems with the mortgage industry back in 07 and 08. So brokers had the full weight of the federal government on them, worse than any other group of lenders. And the number of brokers diminished significantly. And mortgage banks were on their way up, but really at that point, the mortgage bank hadn't really had that much market share. And then it's shifted, and mortgage banks are in the 2010 to 2020 range. Mortgage banks became the number one market share. It's shifting again. And what's happening is brokers are starting to pick up steam. By no means are they becoming number one market share. It's still, they're still a smaller portion of the pie, but a lot more business is going through a broker channel. And there's really one simple reason, and it's because of two publicly held companies. And those companies are Rocket Mortgage and UWM, or United Wholesale Mortgage. So have you heard of either one of those companies, C-Ray?
I have heard of both of those, yes.
Okay. So Rocket used to be named Quicken, and they basically have had the number one spot for the last few years in number of mortgages done. And they do both retail, meaning they have their own loan officers, and wholesale, where they buy loans. UWM is now the number one lender. They've taken the place over on Rocket, and they only do loans wholesale, meaning they only accept loans from brokers. And what it's created is, in my opinion, a bit of what we had in the early 2000s with dot-coms, where you had dot-com companies that had an infusion of a lot of money, and they were kind of just saying, hey, you know what? We'll keep spending money until we figure out how to make a profit, right? We saw how well that worked for those dot-com companies back in the early 2000s, but it was a business model, and it still is a business model that says, hey, if you keep doing enough volume, sooner or later it can be profitable. I'm not really sure how that math works. If you lose $1 on every widget that you sell, and you double the number of widgets you sold, you lost double the number of dollars. I'm not sure where you make that up. I know there's ways. I'm joking, but that's kind of the model we had with the dot-com bust. Well, it's the model we're seeing right now with these two companies that are significantly competing for market share. And what's happened is the mortgage industry's pie has shrunk. Like, real estate and mortgage, there's very, very little business to be done. And these two companies recognize we are publicly held. Now, that means we have to ultimately make sure we're returning profit to our shareholders. Right. But what's funny is sometimes Wall Street cares more about growth than it does about profit. And Wall Street says, well, as long as you're growing and getting bigger, sooner or later, things will turn around and you'll start making a profit. And so they keep getting money. They keep getting people investing because, hey, you're growing. And so they're growing for the sake of growth. And they're growing to try and put the other one out of business. It's the Coke versus Pepsi wars that we're dealing with in the mortgage industry.
Right.
And what's interesting about all of this is that this is where this 1% mortgage is coming from. It started with UWM coming out with a product, and then Rocket came out with a better version of the product. And I'm sure that UWM's next going to come out with a better version than Rocket's version, because they're racing to get market share with the hope and reasonable expectation that, hey, once the market turns and there's a lot more business out there, there'll be fewer competitors because we put them all out of business. And there'll be more business for us to do because we've already built all the relationships. And so that's really the end game. So why do I tell you all this? Because Summit Funding is a mortgage bank, which means we don't have the luxury. We're a privately held mortgage bank. Some mortgage banks are public companies. We're privately held, and I think that's the best thing possible because we have zero debt. We have one owner. I don't have to worry about the company closing down next week or us running out of money. But we also need to not lose as much money as these big companies can. Like, we don't have unlimited stock investments coming in.
Right.
So we made a decision 60 days ago. We said, you know what? If you can't beat them, join them. So we have become a hybrid organization. So I still have all of the loans that we sell ourselves as a direct mortgage bank, but we also have partnered. By the way, there's a story I'll tell you in just a second about why mortgage company can partner with both Rocket and UWM. And it's kind of weird. Kind of seems like it's anti-competitive, and I think it is. But we've partnered with Rocket.
Okay.
And for the products that they have, or if there's a circumstance that they're willing to lose money on a loan far greater than we were willing to lose, okay, cool, we'll give it to you. But what we've positioned ourselves as is the resource that says, look, if you've got a challenging situation that sending something off to a third-party company is never going to get done, because you have fast timelines, you have difficult documentation, you have a tough appraisal on the property, we can handle that because we have all of our channels in-house that we can do everything like we normally do. But when it's a product that we didn't offer, or it's a squeaky clean deal that we know anybody could do, and Rocket's willing to do it and lose a bunch of money, no problem. We'll just assign the loan to them and we'll get it done that way. So we feel like it positions us to not go out of business by losing so much money, but also allow us to provide the best possible options to our clients, because we're not burying our head in the sand and saying, well, just go with us anyway, even though this company over here is willing to do it for nothing. So we're kind of figuring out how to make the best of both worlds. Make sense?
Very nice. Yeah, makes a lot of sense. Makes a ton of sense.
What's interesting is this whole fight, the Coke versus Pepsi wars that UWM and Rocket have.
Right.
A couple of years ago, maybe 3 or 4 actually, UWM said, hey, brokers, if you want to send business to us, the next time you sign up your agreement to renew your relationship with us, there's a clause in there that says, if you send loans to us, you're not allowed to send them to Rocket or 2 other companies. One of the other 2 companies has already gone out of business. So UWM's goal was to say, hey, if you want to work with me, that's great, but I'm prohibiting you from working with my competitors. So pick me or pick them. You can't have both. I don't know how that's legal. Somehow it is. Somehow it
sounds pretty antitrust.
It sounds pretty antitrust to me. So when you talk to a broker, the broker is either a UWM or a Rocket broker. And what's really interesting is for years, brokers, and they still tell you this, brokers say, look, I got relationships with 30 different lenders and I shop them all to find you the best deal.
Right.
But if you look at the statistics, 90% of their business goes to that one company. Whether it be UWM or Rocket is just about which relationship, which fork they chose in the road.
Which they signed, yeah. Mm-hmm.
But the fact of the matter is 90% of their business is going to that company. So what's kind of silly is brokers are saying, hey, I'm independent. Well, the truth is kind of, but that simply means how you're paid. Like you're not on their payroll, but you really work hand in hand with one company and you're really sending all of your business to one company. So are you really shopping for the best deal? Do you really have multiple options? Or do you just have your own name on the sign, but you're really a lender that is, hey, I'm a UWM lender or I'm a Rocket lender. So it's created a really weird environment in the mortgage world. So finalizing kind of where all this comes together is this 1% program. And again, UWM came out with it. And basically what it is it is them being UWM or Rockets giving a grant of 2% of the purchase price so that the loan meets the 3% required down payment that a normal conventional loan requires. Okay, so they're writing a check off the top for 2% of the purchase price. Now here's the catch. The catch is, and it's not a bad catch, but it's a pretty significant catch, especially in California. They don't want to write really big checks, for 2% of $1 million loan. So they capped their loan amount. Now UWM capped their loan amount at $200,000. That's it.
Wow.
And they said you can't make more than 50% of the area median income. That's what UWM said. And so really what it was a marketing gimmick, because when you look at the area median income, and I'm going to pull it up right now for Stockton, and it just updated a week and a half ago, went up a little bit, but I'm going to pull up the numbers right now. UWM basically said, hey, no matter where you're buying, pretending you're buying in Stockton, you can't make more than $50,000 a year, and you can't buy bigger than a $200,000 home. See, Ray, what areas in the United States do you think that really comes into play? There aren't very many. Would you agree?
Kansas.
Kansas. But remember, it's that you can't make more than 50% of that area's median income. Give me a city in Kansas really quick so I can just use that as reference.
What's that?
What city in Kansas would you
Parsons.
Perfect. So in Parsons, Kansas, you can't make more than $39,900 to do the UWM version. Okay, and you can borrow
still a $200,000 loan cap.
$200,000, still $200,000. Okay, so Rocket comes out and says, "Well, I'll one up you. We'll create our 1% program, and we're going to let you go to 80% of the area median income." So in Kansas, that lets you make $64,000. Okay. And they'll let you do a loan amount up to $350,000. Now in Kansas, that's very doable.
Very doable. Mm-hmm.
Okay, I'm kidding. But in Kansas, that's doable. In Stockton, not so much. It's still possible, but it's not common. So the numbers in Stockton, and this is the version that we are offering through Rocket, says if you make less than $80,240, so that's 80% of the area median income, and you're buying a home of less than or equal to $350,000, you only need to put 1% down. And Rocket won up to UWM and said, by the way, we'll waive the mortgage insurance. So they're actually prepaying the cost of the mortgage insurance, which is anywhere from another 2.5% to 4% of the loan amount.
Right.
So Rocket's writing a check for 4.5% to 6% of these loan amounts simply to get business in the door. It's crazy how much money they are willing to lose, but they have super deep pockets. I don't remember the numbers. They released their quarterly earnings a month and a half ago, and they lost a bunch of money. But whatever it was, they had about 3.5 years worth of cash relative to how much they lost in a month. Okay.
Wow.
So, and they were losing a bunch of money, but they still had a years worth of run rate of how much cash they could burn every single month. It's kind of like saying, hey, all I have is cash in the bank, and I want to buy this home, and it's going to cost me $2,000 a month. Well, if you only have 20 grand in the bank, you can only keep that home for 10 months. Right. But after that, your money runs out. Okay. Well, they can lose money at the same rate they're losing it now, and they'll still survive for 3 years. One of the private mortgage banks that is publicly held is called Guild Mortgage. And Guild, because they're publicly held, has to release their financials. Guild lost less than half, maybe a third of what Rocket lost. But they only have 9 to 12 months of cash available. At that loss amount, they have less than a year remaining of time left. And so that's what Rocket and UWM are counting on. They say, we don't care how much money we lose because we have a bigger war chest. And if we just keep losing money at a faster rate than other people can afford to stay afloat, we're going to be the only ones left.
Right.
Kind of a scary proposition. By the way, I know I said this is going to be all about this great program, and it is about this great program, but I think the truth behind it is important to understand. There's a very concerning dynamic happening in the mortgage industry, and I'm not sure, other than getting something. I think the antitrust thing is my biggest concern, because we've got the two biggest mortgage companies that have basically, and by the way, Rocket took the opposite approach and said, look, since I can't do anything about what UWM has written into their contract, they're actually telling UWM's brokers, hey, go ahead and send me a loan if you want to. We'll cover 100% of your legal fees when UWM comes after you to sue you.
Wow.
So it's crazy.
Wow. 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 Wow.
But in the short term, it means there's going to be some opportunities. It means, look, the thing when I tell people about this, is I go, gosh, John, maybe I shouldn't go down that road, because if that company, goes bankrupt in a year or two, what happens to my mortgage? Nothing. It just means that the federal government steps in and says, make the payment to somebody else instead.
Right.
It is no big deal. So if I can get you a deal and have Rocket write a check for 5% of your purchase price to cover your mortgage insurance and a big portion of your down payment, I'm happy to do it for you.
Sure.
And it's not going to hurt you down the road as the homeowner. By the way, you don't even have to be a first-time home buyer. You don't even have to be a first-time home buyer. Like, it's a really, really good program. Again, the criteria is tight. You gotta make under 80% of the median income, and your purchase price has to be below $350,000. But for someone
the purchase price, not the loan amount.
It's actually the loan amount, and forgive me for not being clear. It's the loan amount. It cannot be
okay.
Loan amount capped.
So somebody that had $300,000 worth of equity in their house, could they use that as part of the down payment?
No. So the rules, and I'm not clear on why, but it's still the rules, is you, out of your pocket, you can put anywhere from 1% to 2.9% of your own money, because the total down payment between your money and Rocket's 2% cannot equal 5% down. So you have to be at least no greater than 4.99% down payment. So that's 2% from Rocket and 2.99 from you. The only exception is manufactured homes. I was talking to a realtor up in the foothills yesterday about a client who wanted a payment under $2,000 a month. And as we were talking about the numbers, I said, look, here's what it's going to mean in a purchase price. And she goes, there's nothing out there in that price. And I said, are there mobile modular homes out there? And she says, yeah, but the down payment's so much bigger on those. And I said, no, my 1% down program works. Now it's my 1% down program, but it actually requires 3% down from the buyer.
Right. Because
you still get the 2% from Rocket. On a manufactured home, the down payment requirement is 5%. So Rocket says, fine. If it's not a manufactured home, it's between 1 and 2.9% from the buyer. If it is a manufactured home, it's exactly 3% from the buyer. No more, no less. Because then with our 2%, it meets the required 5% down. It's some unique rules, but it opened up a bunch of opportunities for this realtor when they're looking for a home in the foothills for their client. And she goes, wow, now I have a lot more options to look at, because they can come up with 3% for their portion of the down payment, and they have no mortgage insurance. It's a really good opportunity and a really, really good program.
And there's a few places here in San Joaquin County that would work too, like Tower Park out here.
Yep.
Where you're purchasing the land. It's not a rental of space. You're purchasing the land, so that would work. 3%, Rockets 2, total 5.
Yep. What are we looking at in prices at Tower Park? I haven't looked out there in a while.
The last one I looked out there was about $350,000.
Okay, so we're right about there.
Yeah.
Beautiful. Yeah. That's a great. I hadn't even thought about that project, but that's a perfect situation. You've got condos obviously are good options. Townhomes. If we think about the Lodi Stockton market, one of my favorite projects is actually the Town and Country homes that are on Turner Road, just east of Lower Sacramento. And so it is, they're on the south side of Turner Road. I can't remember what the cross street is, but they're just east of Lower Sacramento. And they are not condominiums. They're townhomes. People call them condominiums, but they're not. And so it doesn't require any of the rules that condominiums require. There's a lot, we treat it like a single family home. And so the rules are as easy as a single family home is. And so there's some really cool specific properties, Tower Park being one of them, the Town and Country townhomes being another, that I think with the right realtor like you see, Ray, on their side, I think that you and I can really help some people with this program and with these specific unique properties and different areas. I think it's a home run.
Right on. Right on. Well, we are at the end of our time.
We are.
I always enjoy speaking with you. You always bring so much value to our audiences out there. I really appreciate it. Started a couple of new things. I don't know if you saw that I'm the first AI certified realtor in San Joaquin County and one of the first 200 worldwide.
I love it. That means it's not really you talking to me. This is an AI.
Today I'm actually me. No, what it actually means is that I have a lot more time now to talk with clients because AI can do so much of the lead generation. I mean, we had that talk last time as far as putting content out. So it really frees up a lot of my time. And so that's a good thing for my clients, your clients, because now we can focus more on talking with them and helping them rather than doing marketing and what have you. So it's really a good thing in that respect. But yes, I have a way to start breaking these clips, these up in smaller bite size. So I will create a file and you will not only get this recording, but you will also have little reel recordings that you can use also. So
love it. I appreciate that very much, my friend.
You bet. Thank you, everybody. John Lone King, all of his information has been running down there below. Yep. Thank you again, John. It's always a pleasure talking with you. Everybody go out and be the sunshine in somebody's rainy day like me and John. And always remember to see Ray to find your perfect home. And we'll see you all again real soon. Thanks again, John.
Bye-bye. Thanks, Ray.